The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday through Friday, 11 o'clock till noon. Today, the 23rd of September, Dow is down 43, S&P is down 458. You've got the comp index down 12 at 5326. You've got the VIX index up a little, it's in the 12s, 12.04, still very low, still suggesting that there's buying pressure there. Most importantly, you've got the E-mini right now. The E-mini is down 3, and you've got this leg C, possibly a peak C if there's no new high above 21.72.75. You'll see that the weekly chart is making that pattern that I call the Chapman wave falling axe. Oh, I forgot to put the CD on. I'll put it on and I'll show you the different patterns today. That's what we want to do on a Chapman wave Friday analysis. And most importantly, what we're looking at is the 120-minute chart. Beautiful pattern here. It has made a stair-step move to the upside. And the final peak G that was made right there on the 8th of September at 2182.75 plummets down to the 2100.25 area on by the 12th of September. So it's a big rally that spikes up, comes back down, and now we've had the 120-minute chart start a stair-step move with that win peak ABCD, a little inside buy signal to buy mode, and then another ABCD, and at 2172, it at noon yesterday. Was it noon yesterday? Yes. Noon yesterday, it stalls, and it's just making a consolidation here. I suspect, now let me just do this quickly. Let's get out of that 120-minute chart. We want to go through the numbers. I want to do as much as possible. There's a lot to talk about today, and I'll include Monday. Monday, I will be talking personalities. I'll be talking about the politics of politics and the debate and what I think each candidate should be doing, and an analysis. I was going to do it this morning. I don't want to waste time on that stuff. So let's just do this. In the Dow, INDU, the Dow is down 45 at 18,347. It went up in a leg C, possibly a peak C today. It got repelled at that downtrend line. There again, that falling axe formation. But this is much steeper in the weekly chart. It's now a down channel. And it says that there's a good chance that by next week, early next week, we will attempt to go to a leg D. I don't think we're going to a new all-time high in this move. This is the one time where the lower yields, higher stocks, I think that premise has changed. This is what my thinking is right now. There is enough indication to say there was some internal strength. There is enough indication to say that with the volatility index, the VIX.X, plummeting in that pattern that I call the Eiffel Tower, single leg A up and a single leg A down. It happens to be a D, but it had that characteristic. Plummeting sharply like this tells me that in the 12s, there is still buying pressure. That's all I want to do, is to look at it as buying pressure. Going back into the 15s means that the selling pressure with triple-digit downs is going to be expected. But down here, it means that you've got at least a semblance of buying pressure. And look at the weekly chart. If ever this was, look, this is very, very weak at this particular moment. The WEAK weakness is in the weekly chart, the WEAK chart. This is, we haven't seen anything quite so steep in such a short period of time in quite a while. So that tells me that there is some support. It doesn't tell me that this can go to the Dow and this S&P can go to new all-time highs. It just says be a little careful here about shorting the indices just at this particular moment, because there is still just enough internal strength that there is support. Now, because the presidential election I don't think that there'll be clarity from Monday night from the debate. So the market could, in fact, say, hey, The market loves uncertainty. It deals with that every day. But I don't think that it likes the uncertainty of uncertainty, if you know what I mean. Now let me do something else here. I want to refresh that. Give me a second. Move it away. Refresh. Just grab another one. Give me a second. I want to do this right here. Good. Okay. So what we're looking at is, and I do want to thank all our hosts earlier on from the 8 o'clock this morning. Just really great program we try to have here. And coming up, of course, is programming all day. So please stay tuned. Now, let's just go to the nitty-gritties. The S&P. So the Dow has a breakout going into the 18,490s, 18,500. I would have to say, okay, now we can very easily go to a new all-time high. And let's look at the support. The major support now for the Dow is at about the 18,270 level. The S&P is down 5. Also a peak C. It hasn't even got close to that declining trend line, that falling axe formation. And what we're looking at right at this particular moment is that the level for the S&P to really break out of is 2186. It's at 2171. 86 means 150 Dow points. That's a lot of points. And the weekly chart is still technically weak. Both the Dow and the S&P weekly charts are not that great, and the monthly charts are really still very, very strong. And I suspect we're in leg B. There's a good chance September we do make a peak B if there's no new high this coming week, of course. So now let me go to the QQQ series, the QQQs. Peak C, if there's no new high today, and my suspicion is we will go to the D early next week, and that's where we've got to be somewhat careful. That's the same as the IWM. Look at the IWM. Had a new recovery high today, still leg C. That actually extends it out even more. It means that the earliest you can get a peak D would be Tuesday if there's a pullback on Monday. So this is still looking quite good. The weekly chart, funnily enough, is still quite good, much better than the others. Even though the other day when the IWM was plummeting to on the 13th down to the 119.88 level, it's now at 125.40. That looked like, whoa, that's going to really impact the weekly. And then all of a sudden, the bounce to the new recovery high in the daily was very good, and it's leg E in the weekly. Monthly is still looking quite good. So let me run through these. We've got gold, the gold GC, holding quite nicely, down 1 at 13.43. It has this Chapman wave inside track in this down channel to break out of. And unless gold can get into the 13.52 area, I think it's just kind of stuck here a little bit. The dollar made that peak D a day or two ago, but it's trying to rebound. I think that they're all stuck in a range right now. So let's go to TLT, very important. TLT is down at 16, down 16 at 136.79. The iShares, the 20-year Treasury bond ETF. This is going to be quite important. Why? Because there's a gap. And yes, the gaps all the time in anything that trades overseas first before us. But in this particular instance, if the bonds, the TLT, from 136.79 actually climbs into the 138s early next week, yields are going to come back down again. And this is going to be it could go all the way to the upper part of the channel, to the 138.90 area. We'll see very, very soon. And the only thing missing right now that I haven't looked at is the crude oil. Crude oil is holding okay. It's down 16 cents, just like the other the other instruments, the dollar and gold. This is stuck in a trading band. And until the band range changes, just up and down can drive you a little nuts. I'll be right back. Basil Chapman, Dow's down 48. I'll be right back, straight off to these messages.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. I used to always look at CBI, which was Chicago Bridge and Iron. I think it's a Dutch company, ABCD. Let me just show you something here, chaps, since this is Technical Friday. That's the low right there. So here we go. Look, A, B, C, D, E, F. Oops, F. And you go A, B, C, D, E. And it makes a stop. So it goes all the way from the zeros. Let's see what it was back in 2009. 4.64. Has a little bit of a run. Goes to 89.22 in April of 2014. Trading now at $26.98. It's been under the 9-period moving average for ages. I did look at it maybe a few months ago. It was trying to bounce, and I thought, okay, keep it in mind. Then I completely forgot about it. So the question in the DNP, what about it? What was the question exactly? I'm not sure what the question was, but I'm looking at the chart, and I can just say to you, yeah, this looks like a ski slalom, like you just keep coming down, you bounce off these moguls. There's another little one right here. I would just give it a few days. I don't care if you miss the low of 26.12, but to buy it into 26.90 or 27 area, until I know that it's made a peak A and then it's pulled back, and that the pullback is for the first time higher than before, and it can actually have another run to the upside, I would then buy it after the peak A is made. 1 penny above peak A, I would start a small position. Let it at least make a B. It's tried it once before. The technicals were still looking terrible. Now the technicals are much better, but today's action down 23 cents at 26.98 is not showing strength at all. So yeah, keep it in mind and remind me again. But at this particular point, the monthly is just horrible, and the weekly is maybe one notch less than horrible. And the daily is just trying its very best to do something. It hasn't once since it broke down back on the 22nd of July in the 38, 35 area, it has not closed above the 9-period moving average for more than a split second twice. Touched it once. So three times altogether, and which time within 1 day it was back down again. Hey, that is not good. Okay, so now let me do a couple of other things. UNG, I did not finish natural gas. Oh my goodness. So the question was with, I believe it was Greg that called the other day. We were looking at it, and I said, I've got an exact, all the criteria we were looking at were met. It went to leg D, and I said I recommended right at about $8. I think it must have been about $8.85, $8.92. I recommended at least take something off now, and with the other part of it, I would divide it into try to keep a core position, because the weekly really is starting to improve a lot, and it had made a leg E. Now it's pulled back to the 867. It's not really very much because it went to $9.02. So to pull back to 867 after you've come off lows that were in the mid sevens is just to be expected. Now the big thing is, what would I do now? Well, the question, of course, goes right to the heart of the matter, that if you were able to get it in the 840 or lower area, I would still say that I'd like to keep a core position. But at the same time, I'd say to you, the other part should have some kind of a stop. Now, the question is, do I get stopped out now at 867 when I could have taken that big profit in leg D when it was looking good? Well, the technicals are turning down at 89, let's call it 90% in the stochastic. The MACD is turning down, but they haven't turned negative yet. And this is exactly the action you look at a peak D, as it did last time at peak D. It went to 887 on the 1st of July, and the next day it plummeted down. This time the D itself became the turnaround day, and now we followed to the downside. I'm a little nervous about that, and I'm going to say to you, take a little bit off now. You can always put back, but you do want to keep your profits, and you've already taken some profits off. I would take a little bit more. That means you've accumulated a nice sum. It gives you a little bit of a cushion to keep that 1/3 and see if natural gas can hold the 850s, 842s, the 200-period moving average. I mentioned that if it was going to break down, that's going to be a critical level. If that's close to your entry point, then I have to say, look, it's completed the left side, right side cup formation to the day almost. It has gone into the Chapman wave inside wedge upper. Oops, I didn't take the opportunity during the break to put my CD on to show you these techniques. It's gone right to the requisite, what we wanted, leg D, buy mode, completion today. It's done everything. And it's gone to leg E in the weekly chart, and it is holding well. So now, really, do I say to you, take off, or do I tell you to add? Wow. It's gone to leg C in the monthly chart. You know, I love this action so far, and if I'm not mistaken, I think this is a seasonally opportune time to have natural gas. I'm going to do, okay, this is what I'm going to say. And I just got the email from Greg saying, what did he say? UNG. We closed out NGAZ yesterday. Oh, good. After reports came out, so I missed the highs by 9%, but took 20% out of the trade. Waiting. Hey, you just solved the problem for me. Great. Listening today, if you have time to get to it today, IBB single leg A up daily in LABU out soon. Thanks, Greg. Okay, Greg. Great questions. So you've already resolved the whole thing. Great. It's a big deal. You took 9%. You got off 9% below the top, but you made 20%. That's fantastic, especially with natural gas. It's not easy to trade it because it does do what we want. It's actually very nice for Chapman wave notations. But boy, look at this peak C that went from the low of $7.55 on the 11th. It screams up to the $8.66. But then what does it do? It pulls back. I mean, you have a stop in place. You're going to get taken out unless you got the exact low. So 784. And now it's up. It goes to $9.02. So it has very sharp moves. I commend you. I'd say have patience. Next week, Tuesday or Wednesday, let's look at it again, because I think that would be the day that you start. Tuesday afternoon to Wednesday morning, I suspect natural gas is back in play. It's either going to work because it has another rebound into the 8s, or you got to look out because it goes to the 820s. So please, I'm thrilled you took your profits. We wanted IBB. I was going to do IBB because it's part of the composite I look at. The IBB right now is trading at 299.64. It made a high today of 301.80. What leg is this in the weekly chart? I once again have no choice but to give it an alternate count. I'm calling it F. It just doesn't look like an F right now. It looks like more like a new B, a leg B to the upside in the weekly chart. And I have to move this. Yes, I still think this is wave 4 in Elliott wave, both in Chapman wave and Elliott wave. Going to leg B. I don't think there's going to be all that much because it could go chop, chop, chop. And for 3 weeks, it could go chop, chop and make a peak B and then a pullback. And this is the nominal C and then a nominal D. I think there's going to be tremendous resistance. The high of 304.76 of the 15th, the week of the 15th of January. Within that context, I'd put it between 304 and 307. I think it's tremendous resistance, but it's acting very well. And I would not fight it. It has, in fact, got the characteristic of a Chapman wave squash in the stochastic and the MACD. There's a break coming up. Oh, so Michael in Sarasota asked me a question, but he couldn't hold on. He's at work. Michael, I'll get to FTR right after this break. Please, I saw it then. FTR is Frontier Communications. I'll be right back when we talk about Frontier, but I'm also going to get my CD ready.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, folks. So we are looking at where, if I can find it. Yes. So Tim in Denver also not on the phone. So Tim called but couldn't hold on. He's at work. So I did the IBB. Let me just review it one more second because I saw his. Al sent me the note and I didn't see it until a moment ago. Yeah. So I've done the IBB because I believe that the 94% in the stochastic and the MACD is still strong. I would not be shorting this. I'm a little upset actually because I had every opportunity to go long. I mean, we've just been looking at it and I've been talking about it still having internal strength, and it could have played it for a very nice percentage, 2% or so, maybe even more. But I did not. Okay, so it's broken out above all the resistance points. I just be a little careful. Yeah, I could pull back. There's a huge leg A to the upside. Is it a single leg A up? Not if the MACD and the stochastic are still strong. It could pull back to 294 and then suddenly have another pop. And that's what I'm thinking. It's just going to work its way through the weekly. I think it's in a trading band, and I'm going to say the trading band is between maybe 307s to the upside and 291 on the downside. I wouldn't be surprised if that's the trading range now. It's just been smashed from the highs of 270 all the way down to 240. I mean, it deserves a breather. Let's put it that way. All right, so that's that. And the next one was FTR, not FDR, but FTR. And FTR trading at $4.32 is Frontier Communications Corp. So I have a problem with this because I don't understand the industry all that well, because you never know with in this whole communications area exactly what they're doing is kind of tough. It made a peak F back in the mid eights back in January, so it went to $8.46 in February of 2015, pulls back, it gets cut in half, it goes to 381, more than half, into the January of this year, has a bounce and then pulls back. You know what I'm going to say? I don't see anything in it other than maybe a little bit of a pop-up. But if you want to play it as a pop-up, then instead, the opportunity is going to be right here, 432. The low today is 429. It came off a low of 407. So that's already a 10%, it's had a 10% pop to the upside. I'm just going to say, start a tiny position right here. I just mean it's like a position that's like a pilot, like, because once you've got it in your portfolio, you'll be watching it all the time. That's different to saying, I'll keep watching it, but you don't. That way you are watching it. And I would say at 432, start a small position. If there's a bounce, 460 is the level that it needs, 450 to 460, and it has to get there by, really, it can take 3 days to consolidate and make a slightly higher high. But by Thursday of next week, less than a week's time, within less than a week, if it's not trading in the 447 or higher area, I would just say, going to fail once again. But this is a time to nibble. Now, here's the other thing. If you nibble and it gives you a peak A by Monday without making a new high, but it still holds very well, then suddenly on Tuesday it pops up. If it pops up 1 penny above 439, the high of today, that's if it's making a peak A because Monday is pulling back. No, I'm going to make it completely different. You can nibble here at 442. I would add another small position. So you've got 2 small positions, and then you've got to hold tight. And the first position can have a stop of 422, and the second position has to have a much tighter stop, maybe a 7-cent stop, because it's going to have to work right away. FTR. But I'm really saying to you, this is the attempt to see if you can get a decent bounce. It keeps making arch formations. Maybe this is the moment. I wouldn't get carried away, and it should only be a very small part of your portfolio. Next question was, so it's FTR, and I've done that's Tim in Denver, IBB, Michael in Sarasota, FTR. Couple of questions, and then I have to go to what I need to do for a preparation over the weekend. Let's go. Adam wants to know DB. Oh, here we go again. DB. You like DB, huh? Deutsche Bank. What was the question? And I do want to say, Greg, congratulations. You really traded that UNG very well. So we're going to go to Adam. And Adam says, DB, RBS, LYG, Eurobank. I can't read that. It's a little far away. Cross, long, and end rate below 0%. We'll see dreaded H. Good question. Yes. So the answer is already in the weekly chart, you've got the inverted cup. You remember I said there's a handle in the cup formation, which is often quite negative. Once you get to the top, there's a pullback, and then it tries again. And it's exactly what's happening here with this inverted handle and cup, right? A little baby H with a bigger H. So all I'm saying to you is this: be real careful, because if by Tuesday to Wednesday of next week, Deutsche Bank, which is trading at 12.81, down 19 cents, isn't able to go above the candle of yesterday, 13.23, but instead goes into the body of this candle from 2 days ago between 12.44 and 12.68, I'd be just say, hey, it's going to break to the downside. But to tell you the truth, I think a huge chunk of this has been done. And I would not be surprised if it constantly keeps coming back to the 12s, even if it goes under it. So this is the time I'd say that shorting Deutsche Bank, I wouldn't consider it unless there's a really nice pop-up. And even then, this is exactly the stage. Where's my CD? Let me do two things. This is the chart. I wanted to show the cup symmetry. You go from the left side to the right side. You try to find a plumb line, the midpoint. Sometimes you have to move the plumb line, but it's great when it works as it did perfectly in the NG chart, the gas chart we were looking at. And then you can look at all these, the inside wedge, these are all things I discussed. Mirror image, left side, right side projections. This is my book called Introducing the Chapman Wave Methodology. So what I wanted to do is, of course, I almost forgot it. So now we want to look at the H pattern, right? So the H pattern is, so I'm going to go to that in chapter 17 right here, chapter 17. The H, this is the opposite. Now what we're looking at is, you see the cup formation? The inverted, the H formation, and it breaks the left side low. You can do a left side, right side price time match as well. But what I really want you to show is, look, at a certain point you can get the bigger H pattern, goes to a lowercase h and then a lowercase m. So now let's go back to the chart formation. What are we looking at? Here's the lowercase m. So you've got to imagine that there's going to be a break to the bottom, and then it's going to try to come back, and that next comeback is the one where there might be a stronger rally. That's what you've got to be careful of. Okay? So Terry, thank you in the den. This is just rubbing it in my face. We had this, folks. This is Twilio. Look, let me show you something. I did a beautiful analysis of this. I really did. I'm proud of it. And we were long at 39.65. We were long at 41.49. We were long at 42.61. We were long at 42.60. We were long at 54.25. We were long at 56.49. And we lost a little money rather than making money because I made the stops a little too tight. I mean, an IPO, I didn't know where to put the stops. And my idea was that the weekly would go to leg E. Leg D. And where is the weekly? It's in leg D. So I'm thrilled that I get messages from some subscribers who said, we liked your analysis. We have stuck with it. Congratulations. I was a dodo. I just didn't. I'm sorry. I just could not have the stops. I had to have them tight. That's just the way it is. And I had it on the list 2 days ago, and I thought, you know what, we've chosen another one, a very low price stock, which is giving us as much in appreciation as this has, so I don't mind. We're going from 414 to 422. I think that's nice. Okay, so I'll be back, Basil Chapman, and we'll look at some more of these patterns, and I want to do a little work on preparation for what could happen next week. Dow's down 47, S&P's down 462. I'm not even sure I showed this chart of all that work I did. Let me show it now.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Yes, so FTR stated here, who was it in the den, gave a very nice little, Mike K says they took over for Fios down there, FTR. So yeah, so there's the business plan, that sounds good. Also a question about TRV, Travelers and the XLF and the financial head and shoulders. Yeah, you see, TRV, in the Chapman Wave methodology, one of the most important, well, the most important aspect is to be able to identify, starting from the most obvious lowest low bar, higher peaks. And in those higher peaks, what you're really looking for is this, right here. You're looking for the identification of the low, and then you merely want to count each successively higher peak. And when you get to peak D, that's the objective. The buy, you only have a buy mode when you go to a D. The buy mode can extend, but it's a failure if it goes to C and then collapses and goes below the left side low. That's that H pattern, the lowercase h pattern, number one. Number two is, within the context of the Chapman Wave, there's a thing called the Chapman Wave Instant Restart. It took me a lot of time, a lot of money, a lot of effort to actually articulate what it is, but it's where you don't know for a little while that a buy mode has actually been re-triggered, meaning there's going to be yet another 4 peaks to the upside. It's an incredible tool, because if there are 4 peaks, and usually when you get an instant restart, you don't go to 4 peaks, you actually go to 5 and sometimes even 6. That's how powerful it is. So that's one of the techniques. So now what we're looking at is, the objective is get you to D in every chart that we're looking at. Doesn't matter what time frame. And lo and behold, what are we looking at? The Travelers goes from a low of 101.23 back in the week of the 22nd of January. And then it goes to what? It goes to a peak C at 119.30 on the week of the 1st of July. And then it chops around. But what does it do? So you got your high of 119.30. You need 119.31 to make a leg D. And lo and behold, 119.32 makes your D, and now it's pulling back. And what happened? It means the same thing happened in the monthly chart. We've gone to a D. Doesn't mean that that's a major drop. No, it says, hey, be careful. D is where you've got to be somewhat careful, because other things can happen. They don't have to happen, but that's where they can happen, right? So I'm looking at Travelers and a number of stocks in this category, and I'm saying, hey, just be careful. Question about the XLF. How am I going to XLF is just restarted. It is a new thing altogether. I can't go there. This is leg B, peak B today. It looks like it's done. So I have to wait a long time before I get this. I hate when this happens. It just messes up. I mean, I've been looking at I've got XLF notated from in every time frame. I mean, going back years and years. So anyway, it doesn't matter. I've got the BKX because that's what it used to trade off. So the BKX is failed. BKX, let me get that. BKX must be there. There it is. So the BKX is what I can use. And I'll renotate it. I thought I was going to do. I never had time. So here we go. A, B, sometimes it's just really tough. I can see it by eye because I've done it so many thousands of times. Yep, there it is. That was a B. That's why I stalled. There's a C and there's a D. C, and you get to a D. And then what happens is it goes to an E right there, and it starts a new buy mode. It goes A, B, is that correct? B, C, we've got ourselves a D. Okay, so now what we've got is a pullback because it has to have a down arrow because the MACD and stochastic plummeted with the price, and it's having a little bit of a rally. And I'm looking at this and I'm saying, good, I'm going to be starting to focus more on this rather than the XLF. You can still trade because that's your vehicle, but the analysis has to come from the index itself, which is the BKX, the KBW Bank Index. Okay, so I'm going to just do this, and then there's a chunk of work I want to do getting ready for the final section today, and I want to do that before we wrap up. So let me just do this. The BKX index, as I have been mentioning for a while, is holding very nicely. I said XLF, but now I'm going to go to the BKX. And that's holding very nicely. But what's really important about it is within the context of everything we're looking at, the monthly chart is a new leg B, but it's a gray B. Why is it gray? Because it's underneath the previous major high that produced a pretty big pullback from the 80s to the 56 area. So that says that we've got to be a little bit careful. The MACD has to cross positive, and it's not even close. It'll take at least another 3 points on the upside before it can cross positive. And the stochastic is rallying, but it's not great. Okay, so now let's do this. I'm looking at the cup formation. I'm going to tell you just very clearly that the way I'm looking at this is that I believe that next week is, I always talk about certain weeks that are probably the most critical for a certain time frame. Next week, the closing price of Friday, a week from today, is going to be very critical for me for monthly charts. And that's going to be, that's every time we get to a point where I say it's very critical, I'm saying this time is critical for monthly charts. However, the XLF is going to be very important, call it the BKX. It's going to be very important because it's holding the 9-period moving average. The MACD is good in the weekly chart. The stochastic's at 89%. I think it's holding very well. So I'm not in favor of shorting any of the bank stocks right now. I think some of them could act very well over the weekend. I'll try to identify which ones are the best that I'm looking at. Now let's do something else. A question about GLD, gold. You know, I said that before. I think it's in a trading range. I like its action. I like the GDX a little bit better than the GLD. But in fact, the funny thing is that this time the GL, look, keep your eye on the middle chart. That's the weekly. Left side daily, middle weekly, right side monthly. Keep your eye right on this middle chart. Here we go. Look at this chart change. Isn't that a much more positive chart? That's gold. So this is the first time we've seen a rotation where the gold stocks are pulling back, but gold itself is acting well. And I've been saying that I think over the period of 6 months to 8 months, I would not be surprised if gold, there's something going on that's going to make gold very attractive. So I've covered that. Now I want you to, that was part of what I want you to do. Here's another thing. I'm going to look at, that's the GDX. I just had a question about that as well. So the other thing that I want to look at was, where did we go? Intel. Okay, INTC. So Intel, which really looks like the SMHs, is pulling back. I think it's made a peak E. The SMHs. That's why I'm thinking that maybe next week I'm looking at some kind of a top coming in. Maybe as early as Tuesday, Monday, Tuesday. I don't know, but that's why I'm looking at a peak C in the semiconductor index. It really needs to get to D. If it fails here, that'll be so different to anything I've seen before. 68.39. I think we will try for that sometime next week. I don't know. Wow, after the debates and everything, what on earth could make us get there? But I think we're going to try for that. It looks to me like we will make a higher high in the SMHs, slightly higher at 68.39. That's kind of what I'm looking at. Now, I had a question about would I look at GE, my Dow Quartet. See, GE is holding okay, but it's really a horrible looking chart right now. But the daily is just saying, hey, there's enough strength to maybe go to a leg C, but way down here, it'll be that arch formation that I always talk about, the lowercase h, IBM. IBM is, yeah, it's the same sort of thing. Triple M down $1.68, had a spiral up to 181.66, and UTX. I'll be back straight after this break. Hey, these are saying to me that the rally could fail next week. I'll be back. Basil Chapman, Tiger Technicians Hour, Downtown 58.
Hi, I'm Steve Rhodes, host of the Trader's Edge Heard Daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
There are a number of questions I got about the gold. I'm just going to say, if the GDX trading at 27.37, down 37 cents, if it closes under 20 any day, I'm looking at the weekly chart, but on any day, if it closes under 25.17, let's call it 25. A close below 25 suggests that gold is going to pull back for a little longer. That the gold stocks are going to pull back a little longer, and perhaps even a little deeper. It could even go down to the 23, 22 area. In the gold contract, it's holding very well, but the pattern is a pattern so far of lower lows and lower highs, just slightly lower lows, slightly lower highs. And I'm just going to make it real clear that if the GLD closes under 124, 121.86 is the 200-period exponential moving average. If I look at gold, it's the same thing. Gold is at 1330, and I've been saying mid-1280s is going to be a target if there's a breakdown, 1285. 1284, somewhere around there. Okay, so let me get back to the nitty-gritties here. The fact that the VIX index has plummeted so deeply and is now at 12, as I say, is giving me a little comfort to say that there's a cushion for the market, because even now it's only up a penny. And the market, the Dow's down 60, the S&P's down 6.5. Something's going on. It hasn't even recognized that there's some selling pressure. So it could be very sudden, but it would not surprise me if there is a sudden pop-up at some point over the next trading 2 days. That's going into Tuesday, it could even be Wednesday, so that I'm looking for just a modest new high, and at that point, I'm all stops. I'm going to have one foot on my foot on the accelerator is coming off, my foot hovering over the brake is right there. I don't quite like the action thus far. In a way, I'm really sorry that we got out of our short position in the Dow, because we got in right almost at the top. But you know what? It's not a big deal. We can do it again. I just did not want to be vulnerable to give up gains when this market was susceptible to some kind of news pop-up. Now I think almost all the good news is out. I'm not sure what could come out. If there is a spike to the upside, it's going to come from, I don't know what it's going to come from. So I'm becoming much more cautious again, and I'm saying that this chart here, I'm anticipating the Chapman wave, there should be a move above 18,449. Doesn't have to be very much over it. So that's 449, huh? That's 130 points to the upside. What could give us a 130-point pop to the I don't know. Or it's going to be a failure pattern. But I'm looking at this and I'm saying, hey, this is what we're looking at now is a market that's just showing me in weekly charts. If you go to all the big guys like the Amazon, look at this, Amazon, and I'm waiting. Oh, Amazon just spiked to the upside, it's up 42 cents. If you're looking at the big ones, A, B, C, yep, there it is, D in the daily, recycled A, B, C, D in the weekly, but very strong. And I think you're going to have a couple of leaders going into the end of the year. I would not be surprised if Amazon is one of those. So you've got to focus on seasonality and what is working very well. But when I looked at my Dow quartet, they were not great. And I just have to say, I'm going to put my faith back into the VIX index and suggest that the VIX going into the 14s, back into the 14s, and then the 15s, that's what you want to see. And it's got to be accompanied by bad news. And then we'll start the next down phase in the market. And this is just a very much needed digestive period. And if you're looking at monthly, the daily chart, look at this. As we're about to go sign off, look at the monthly. Since the May 15th high, we are still down. And the weekly chart is going to be very important, because this weekly chart, if we close anywhere around here today, right by the 9-period exponential moving average, is going to make a lot of things a lot clearer, because we are now closer to a breakdown of the trend line in the weekly chart at 18,000 than we are to the 18,668 area, if there's an H pattern to form next week. So, hey, be a little careful here. This could be a little consolidation after the big move up, but I'm looking at most of my charts that are important, like the GEs, etc., and they're suggesting limited upside, but we're going to start looking out for some downside movement next week. Have a great weekend. Check out my opening call.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to the Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.